Well, India's startup ecosystem, the third largest in the world after US and China, is staring at it's one of the biggest challenges yet. Byju's, Swiggy, Ola, Pine Labs, you name them. We have seen all of them who had become the shining stars of the startup ecosystem have now seen their valuations plunge in the past about a year. A double whammy of sorts, slowing revenues and no clear path to profitability on the other side as well. And a fund squeeze, on the other hand, has also put the Indian startups under enormous pressure. Mr. M.G. Arun now joins in, the executive editor of India Today magazine and the author of this article on what lies ahead for the Indian startup ecosystem. Welcome, Mr. Arun, and thank you so much for taking the time out. Well, first up, help our viewers understand the key reasons for the shakedown in the startup sector in India.
Sakshi, of course, there are quite a few reasons for this. We all know that when the pandemic hit us in March 2020, the tech apps were the go-to for a lot of people. I mean, everybody was staying indoors, everything was shut. So, naturally, there was a huge boom in the usage of most of these tech applications, be it your ordering food online, be it, ordering your groceries, or even the education sector. In fact, one of the biggest beneficiaries of the pandemic has been the edutech sector, because everything was shifted online. You had online classes because students can't afford to miss it.
Yeah.
So from that kind of a scenario, once the pandemic was over, we started to feel the pressure. During the pandemic, there was a huge fund flow which came in from the US, from Europe, because we all know that US itself pumped in some $5 trillion into its economy to stimulate it.
Sure.
And Europe also pumped in some, $865 billion. Now, all this money, the availability of cheap money was a big boon for these startups, and investors pumped in these money into the emerging markets. But once the pandemic was over, the economies, the big economies of the world were stuck with one of the biggest threats of this kind of loose cash flow, and that is inflation. So high inflation again forced the central banks to raise interest, which made money very, very costly. And when money becomes costly and it finds itself better to be parked in certain debt instruments rather than equity, so these money flowed back into the US and Europe and from the emerging markets. So startups all on a sudden became, on the one hand, they were caught between a dwindling business, a dwindling demand, and on the other side, they were all on a sudden caught up in a funds crunch.
Fair point. Mr. Arun, also if you could share some insights on how the valuations of these top startups in India have also fallen in the recent past, and why exactly are top investors doing a sharp markdown in their valuations too?
Yeah, that has been one of the hallmarks of this, Sakshi, where we have seen some of the top investors mark down the Indian startups. For instance, the Byju's valuation. Byju, of course, was a decacorn till recently, but from $22 billion, it has now been marked down to $5.1 billion by one of its top investors process. Now, what has happened is that when the education segment, when the edutech segment within the startup ecosystem, everything was online, then they had a lot of demand. There was so much of interest from investors, but now children are back in schools, except for certain segments of the edutech. It is not a fair game for the edtech startups themselves. So it is only natural that there would be a shift in focus for the investors from the edutech segment. And we have seen even other startups going through a lot of correction. We have seen Swiggy's valuation being corrected. We have seen Ola cabs being marked down. Now, it is natural that when there is a funds crunch overall, that investors will be much more sharp, and they will make very, very sensible decisions. They would want to do a lot of due diligence, and they would only invest wherever they are seeing a lot of profitability and performance. And that is what led to this kind of markdown in valuations, and it is a warning signal to all these startups.
Absolutely. And Mr. Arun, not long ago in the COVID period, India was registering new unicorns every few days on the back of billions of dollars that you also pointed out that they were raising. Now, Indian startups have just managed to raise about $3.8 billion in the first half of 2023, and this is the lowest half-yearly funding in the last 4 years. Why are they suddenly staring at a funding crunch, and is this funding winter here to stay?
Yeah, that is a very interesting question. You know, we have seen how the funding has increased in the startup ecosystem over the past few years.
Yeah.
In 2019, the total amount that Indian startups got was around 13.2 billion. It fell a little bit during the first year of COVID in 2020 to 10.9, but thereafter it soared to 35.2 billion in 2022. Now from there, it has taken a dip to 22 billion in in 2022.
Yeah.
And now this year it's going to be quite bad. I mean, that is what we are hearing from you know, the industry as such. The PwC India report, which they have released recently, shows that in the first half of this year, just $3.8 billion has come in. Now, if that is the rate at which you know, the funding happens, then we'll be seeing maybe around $12 billion or even less. That is what some of these investors say, into the country. So that means there is going to be there is already a funding winter.
Yeah.
And the reason for it is precisely what I was trying to say, that you know, investors are going to be very careful. There is an overall funds crunch. The limited partners who sort of, you know, put in their money into these private equity funds, they are a lot more cautious. They are asking a lot more questions. In India, we have seen how companies have gone through certain very questionable governance processes. We have seen how companies have squandered the money. We have seen some of the startup promoters behaving very irresponsibly.
Yes.
And I'm not really taking names here, but it is out there in the public domain.
Sure.
How some of these startup companies have really squandered money. And we know that you know, startups in general have gone through an exuberance where, you know, some of them hire at very fancy salaries, you know, without you know, applying the right kind of due diligence when they take in people. And it's anyway, it's free cash. So when you have free cash, then, you know, you tend to waste it. I mean, that is a general tendency, and that is exactly what has happened. Now the reverse is now going to happen.
Yeah.
The funds are not cheap. The availability is not there as before. So there will be a more judicious way of putting this money into this, and that is why the funds crunch is going to be there.
That's what the hope is, Mr. Arun. Many thanks for being with us on the show and sharing all these insights. That will be very helpful for all the viewers who are concerned with the things that are happening with the startup ecosystem in India and what to look forward from here on.
Okay, thank you so much, Sakshi.